You give the next heading, that is next adjustment number 9, provision for discount on debtors. Debtors basically are our customers. So sometimes we will allow discount to debtors, discount to our customers, not always. We have studied cash discount and trade discount. If they purchase in bulk quantity or if they make payments on or before the correct time, due date, we will be allowing them discounts in certain cases. But when you allow discount to your customer or to your debtors, we will be allowing discount only on good debtors. Good debtors means debtors from whom we can recover the amount. That means further bad debts, new provision, all these must be deducted before you compute or before you allow discount to debtors. So that calculation I will show you. You just remember one thing, discount will be allowed only on good debtors. Good debtors means debtors from whom you can recover the amount. Only for them you will be allowing discount. So we will work out illustration 13. There we have this discount on debtors. So trading account again you have to do yourself. I will be starting from P&L only. So give the headings and all when you start. Now I am starting P&L. I think it's gross profit there. Yes. So we can start like this. You finish first trading, then you continue this P&L account. Gross profit here is 66,000. Then we have to go through all indirect expenses. Manufacturing wages, it is direct. Fuel, power, light, all these are direct. It should go to trading. Salaries, indirect. It is having an adjustment. Salary for the month of March were outstanding. That means 1 month salary is outstanding. So salary there it is given like 11,000. That is actually how many months amount? This 11,000 means it is 11 months amount because 1 month we haven't paid. So what we paid is for 11 months. So 11,000 by 11 we will get 1 month salary, which we will add because that is outstanding. Understood? So this is how you have to compute salary amount. Then we have bad debts. For that also we have adjustment. So 2 bad debts, it is given 500. Then we have to write further bad debts and all. 2 bad debts in a column 500. Add further bad debts, take it from your adjustment, it's again 500. So it's 1000 now. Then add new provision. It's not compulsory that after 2 figures you have to write the total. If you want, you add new provision also, then you write the total. New provision, the amount is not given, but it's written like 5% on debtors. So you must compute the new provision. 5%. Debtors value here is 28,000. From that you must deduct further bad debts of 500. So now the new provision figure will be 1,375. So now it is 2375 less one more item, don't forget that, alt provision. Take it from the trial balance, it is 1,000. So again it will become 1,375. Then there is provision for discount on debtors, which we will write as a next item. With bad debts you have to adjust only so much. Then income tax is given. What is income tax? That we have learned before, it is drawings. The tax paid on individual's income is termed as income tax. It is drawings amount, which we will deduct from the capital as usual in the balance sheet. Then loan to param. We have given a loan to a person. It is an asset for us. When you take a bank loan or when you borrow money from someone else, it is your liability. But when you are giving a loan to somebody else, it is your asset. So here it is an asset of 5,000 which should be recorded in the balance sheet, but I have told you whenever they are writing or whenever they are attaching the rate of interest, that means it is a hidden adjustment or implied adjustment. So here there is interest as hidden adjustment, but here it is not something which we have to pay, this is something which we have to get, because you have given a loan to Param and we are supposed to get interest on that, and you are supposed to get interest of 5,000 into 10%. We should get 500. See the very next item given, interest on loan to Param 300. It is not an adjustment, it is given inside the trial balance. Interest on Param's loan which we received is 300, but actually you are supposed to get 500. This is the meaning. From where did you get that 500? Because it is hidden adjustment. So 500 is the actual amount you are supposed to get. Out of that, 300 was already received. So what is the meaning of the balance 200? It is still receivable, or it is termed as accrued interest. So what we are supposed to do now is, inside your P&L account, on the credit side, all these are income for you. On the credit side, you must write by interest on Param's loan. What we received, we will write first. The 300 we received is an income, so we credited it. With that, we will adjust that accrued amount. What is the accrued amount here? The receivable amount 200. Outer column you can show that 500. Understood? Repeat this portion once more. How we computed that figure for interest. Remember one thing, it's not payable amount here, it's receivable. This is receivable. 300 which is given inside the trial balance means already received. Understood? Only adjustment will come as receivable, payable and all. Whatever given inside the trial balance, it is paid or received amount. So this is received amount which we credited. Then we have commission received, and against commission you would have put a tick mark, isn't it? See, I didn't ask you specifically to go through adjustments and all, but the first step for every question is same. You have to go through adjustments, you have to put a tick mark against items having adjustments. I will not be repeating it. So commission received, and it's having an adjustment. Commission received includes 3,000 which is received in advance. For next year, we received this year. So that's received in advance which we less. So you have to write on the credit side by commission. In the column, the received amount will show for 500 less received in advance. For 500 is already you received, that is for this year only, it's not advance amount. The adjustment amount is advance 3,000. So that you have to deduct, it's actually next year's. Then cash in hand, rent, okay, rent must come here. Along with that, did you see one item, rent outstanding? It is not adjustment, it is given inside the trial balance. So rent outstanding, if you see an item inside the trial balance, what did I tell you? Look into the basic nature of the item. The basic nature of rent outstanding is, it is a current liability. It must be shown only on the liability side of the balance sheet. Don't write it here, don't add it with rent, because it's not an adjustment here. Okay. So to rent, 4,000 we'll write on the debit side. Then in your textbook the order is different. It's better you follow this order. I am just following in the order in which they have written the question, so that you won't miss out any item. Then provision for doubtful debts, all those we considered already, the new provision and all. Then furniture, against which we have a tick mark because there is depreciation on furniture. So the calculation I'll show here. All these calculations you can show in your working note. That means after your P&L, you leave space for completing P&L, then you show all these as working notes. Okay, the second working note, that the depreciation on which item is that? Yes, furniture. You have to compute at the rate of 10% per annum. Per annum means it's 1 year 10%. So you have to consider the time period always. Furniture, two figures are given. Inside, within the brackets they have given like purchased on 1st October for rupees 1000. Other figure is 5000. The meaning is the total furniture value is 5000, out of which 1000 worth furniture was purchased only during the year. Understood? 1000 worth furniture was purchased not on 1st April but on 1st of October. During the year only you purchased this. You have a total furniture of 5000, rupees 5000. So the balance 4000 that was there with the firm from 1st April onwards. This is the meaning. Understood? We purchased 1000 worth furniture only on 1st October. In total we have furniture of rupees 5000. Meaning is the balance 4000 was there with us, or we purchased it on 1st April itself. So on this 4000 you have to compute depreciation at the rate of 10% for how many months? This is there for 1 full year, from 1st April till 31st March of next year, 31st March 2020. That means 1 full year we have this furniture of 4000. So on this you just have to consider 10% directly. Understood? Even if you consider the period, it will be 12 by 12, 12 months. Understood? 1 year means 12 months. So no need to consider the period if it is for full year, because it is 12 by 12 means 1. Even if you don't consider, it is the same answer. But this 1000, on this when you compute 10%, compute the time period. For how many months you have to compute depreciation? Starting from October. So start from October. October must be included because it is 1st of October. So October, November, December, January, February, March. That means for 6 months you have to consider. So now your depreciation on furniture altogether, it will be 450. If you want, you can write the calculation here also within brackets, but somewhere it should be there. Somewhere means not on your calculation sheet, it must be there along with your answer. So depreciation on furniture, it's 400 plus 50, 450. Then what next we have? Machinery, sundry debtors, creditors, capital, closing stock. Okay, then closing stock, that will come in trading account only. 2 values are given. You must take whichever is lesser as per LMC rule. Okay, bad debts provision we considered. That provision for discount on debtors is the next item which you have to write. That I will show you. Depreciation we recorded, commission received in advance, salary, all these we recorded. Yes. So that provision for discount I will show now. It must be first written on the debit side of P&L as a separate item you can write. Provision for discount on debtors. And what did I tell you? This will be allowed, this discount will be allowed only on good debtors. So what is debtors figure actually? Debtors figure is 28,000. From that you must deduct further bad debts, only further bad debts, not existing bad debts. Further bad debts of 500. You have to deduct one more item, that is the new provision, which is 1375. On this you can compute 2%. That's a discount, provision for discount. Understood? So discount can be allowed only on good debtors. Good debtors means from your debtors deduct further bad debts, then deduct one more item, that is new provision. How we computed new provision? From debtors less further bad debts. Here we have to less that new provision also, then you will be getting the provision for discount. Only further bad debts and new provision, not the old provision and all. So now provision for discount on debtors will be 522, that you can write as a separate item in your P&L. So, this is how you have to do P and L. Compute the balancing figure items I have written. You compute the balancing figure. Then balance sheet items, I will just explain. The new items I will explain. Capital, with that you will add net profit. Less drawings is indirectly given as income tax. So, that income tax of 5,500 you have to less, you have to deduct. Then rent outstanding is not coming as an adjustment, but it is given inside the trial balance. Already we discussed that. Basic nature is current liability. So, you have to show it on the liability side of the balance sheet. Okay. Then adjustments also you have to see as usual. So, the liability side you can do, asset side I will show. Don't simply copy the answer from textbook. You try yourself first, then you can check your answer. So, asset side I will do now. We have, you have to see the fixed assets first. So, here we have machinery, no adjustment. So, directly you write in the outer column. Then next, what is given in the trial balance? Furniture is given. So, we will write furniture. Furniture, the amount is altogether it's 5,000 less depreciation, total is 450. You can write like this, no need to separate. It is 4,550. Then just go through trial balance items, see whether you have any other fixed assets. Okay, fixed assets are over. We recorded that furniture and machinery. Then with loan to param, we know that it is not a liability, it is something which we have given. It is an asset, and loan to param, if it is for more than 1 year, it will be a non-current asset or fixed asset. If it is given only for a period of 1 year, it will be a current asset. So, either you consider it as current or non-current, that is okay. You can write it here, loan to param, right in the inner column because it is having an adjustment. Loan to param amount is 5,000. With that, which is the adjustment there? Not the 300, that is the received amount. The receivable amount is your adjustment. That means that accrued amount, no, accrued interest of 200, that is your adjustment. Is that 200? Yes, 200, which is an adjustment which we can add and write 5,200. Textbook they have written as separate items, you can write like this. Then next is closing stock. When you start your current asset section, write closing stock first, or else you will miss out closing stock, and take the lesser value 30,000. Same thing you would have written in the trading also. Then next is sundry debtors you have to take. Debtors having adjustment, so consider those adjustments. Debtors amount is 28,000 less what should we do? Further bad debts. What is further bad debts amount? Further bad debts is 500. Then less. Okay, now it will become 27,500, or else you deduct all other figures together and then write the final in the outer column. This way also you can write. Less new provision, all these are familiar to you. It's 1,375, again within brackets. So now we will get 26,125. It's not over, because in this question we have provision for discount on debtors. And this provision for discount on debtors, it's affecting the debtors value, isn't it? We are allowing some discount to debtors. Suppose debtors had to give us 10,000, but now we allowed a discount of 1,000. He is now supposed to pay us only balance 9,000. Understood? So, discount or provision for discount, if it is there in the question, first treatment is show it on the debit side of P&L. While you compute, compute only on good debtors. Debtors less further bad debts, less new provision. That's how you have to compute. Later, this provision for discount must be deducted from debtors. So here we will deduct provision for discount on debtors. It was 522. So now outer column it will be 25,603. So this is how you have to do debtors. Then we have closing stock we wrote, bills receivable, and finally cash would be there, no? Yes, cash in hand of 20,000. So bills receivable it is 6,000, cash in hand is 20,000. Go through adjustments once again. See whether you recorded all items. Closing stock, yes. Further bad debts, provision, commission in advance, it must come on the liability side. Depreciation, yes. Salary outstanding must come on the liability side. So with this, the balance sheet is over. I mean, I have shown only the asset side. Liability side you can do, it's easy. So you try yourself, then you check the answer. At least the liability side you do yourself. Then see whether your balance sheet tally finally. It should tally, it should be the same both sides. So this is how we have to consider provision for discount on debtor. So now we finished 8 adjustments. 8 or 9, was it 9? Yeah, 9th adjustment. Yeah, that was 9th adjustment. So 9 adjustments are over. 3 more adjustments are there.